We have immediate reaction with us here in the studio, Chinwe Egwim. She's the head economic intelligence chief economist at Coronation Merchant Bank, and of course Tajudeen Ibrahim, director research and strategy at Chapel Hill Denham. Lady and gentleman, good evening to you both. Thank you for staying late with us, because this is the latest one we've had. It's usually at 2 p.m. in the afternoon, but it's 5 o'clock, so thank you for sticking around. Well, first of all, let me get reactions. Chinwe, what did you make of this latest hike? Was that in your purview? Yeah,
well, it wasn't surprising given that our expectation was either a hold stance or a rate hike. And given what we heard, the committee was, shall I say, divided, because almost half of them voted to hold, while the others voted for the 25 basis points. I think maybe about 2 voted for a higher rate hike. So, yeah, it was within our expectations. But you know, the thing is, ideally, strong GDP figures actually do encourage rate hikes. And of course, for a committee that is postured towards inflation targeting, inflation policy rate hikes are expected, right? But like if we look at historicals, we would see that since last year, the policy rate has been hiked up by about 700 basis points. And then when you do a soft analysis on the headline inflation, we've seen upticks by over 700 basis points. So, yeah, I do believe that rate hikes are helping, but minimally, just based on data that's out there. Thank you,
Chinwe. Tajudeen, your thoughts on what we
just... So it is in line with our expectations. We had communicated to clients that about 25 to 50 basis points will possibly be the number. And the way I see it is that we shouldn't be too aggressive in tightening monetary policy, considering the negative impact it could have on economic growth. And so coming out to do 25 basis points is much in line with our expectation. If we now add that to the moderation of the corridor, I think that sends a particular signal to the market. And what I'm not sure at the moment is whether the CBN will pursue that strategy to ensure that short-term interest rates are elevated and encouraging for foreign investors to come into the country. We are looking for stability of the foreign exchange naira to dollar, but we have our short-term interest rates at historically low levels. So I think, at 15.75%, the SDF, it's probably sending a particular message to the market.
Just to help our viewers, that's the standard deposit facility,
correct,
right?
Correct, the standing deposit facility.
Yeah, standing, that says standing deposit facility. Thank you for that. Chinwe, let me come back to you. So what's the impact now? I mean, with this going up, is it borrowing costs getting more expensive? Well, how do you see the impact of this? Yeah, well, it's 25 basis points, and of course, it's a signal towards lending. Not just lending, also FI instruments. Like, it's possible that we would see... two of you are using so many acronyms.
I'm so sorry. Fixed income.
Fixed income. Thank you.
Fixed income instruments are likely to trend up. And of course, that reflects borrowing costs, as you've mentioned. But yeah, historically as well, transmission effect is always slow. I think looking ahead, something that may occur is that loan growth in the industry could be, I don't know if the word is muted, but could be impacted due to concerns around non-performing loans. And then maybe let me bring it home to the real economy. The average Nigerian is likely to feel further pinches if companies pass on the increased cost of borrowing to consumers through their products.
Yeah. So, yeah. Thank you for that, Chinwe. Tajudeen, I have to ask you about the CR, cash reserve ratio. Now, they left it unchanged at 32.5. However, for merchant banks, it has been reduced from 32.5 to 10, effective August the 1st. We also know that when the latest FAC allocations were received, it was 1.9 trillion, but 1 trillion was held and 9 billion was shared because of fear of money supply. Money supply, of course, now at a historic high of 63.4 trillion naira. So can you, how you put this all together now?
So the way I see it is that what they did for the merchant bank is inconsistent with the broad objectives and targets of the Monetary Policy Committee meeting. And I was expecting that they will get to this committee before that kind of a decision is made. But they made it at the central bank level, and it speaks to me around maybe they were looking at the impact, that the impact on liquidity injection into the financial system will be limited. That's on the one hand. In terms of the CRR for the commercial banks at 32.5%, I think it is just appropriate to leave it at that level. Because what do we mean by CRR? It means for every deposit you bring into the banking system, sterilize 32.5% of it. Let us sit with the CBN at 0 interest rates. Nigeria has one of the highest CRR in the world. China has 10.75%. Ghana has 14%. Egypt has 18%. Ours is 32.5%. So you will strangle your economy if you consider further hiking that rate, because you are sending a negative signal in terms of liquidity flows in the financial system, and also in terms of how banks will price their loans going forward. They will price their loan higher if they have less to lend out, from the deposit base. So I think, leaving it at 32.5 is consistent with my expectation. And I think over time, Nigerians should watch out for when that ratio will come down. Not in the current year, most likely, but it is looking to me like from next year, we could begin to see the number come down. And then that will encourage more borrowings and more investment in the economy that will underpin economic growth.
Thank you for that. Okay, I want to switch to inflation now. 22.79% for June, as was asked at that meeting. You kind of said it in your first answer, but it doesn't look like it's working to moderate inflation. What do we do about the inflation challenge at this point? How are you viewing it?
Okay, I could share our projections, current projections. Obviously, this is something that we revise on a periodic basis. For end year, we have it at 24.9%, so we do expect to see further upticks. Now, in my view, monetary policy alone is not sufficient to tackle or to tame inflation. In Nigeria, the inflationary impact is really driven not just by demand pull, which is where you would see monetary policy coming in, but also cost push inflation. And of course, this is conversations we've been having for years, that infrastructure deficit, things around logistics, security, basically just things around just a conducive business environment are impacting the inflation figures. So I think proper cohesive collaborative approach between the monetary and fiscal authorities is required for us to actually see significant declines in inflation, and not just from a base effect perspective, where it's the data that's showing you that it's trending down, but the actual impact in the markets when you walk into the markets. Yeah. Thanks
for that. Tajudeen, what's your take on this inflation, this battle with inflation that we seem to be losing?
So inflation, I believe, is largely structural. And, not something, just like Chinwe said, it's not something that can be tackled completely with monetary policy instruments. My sense is that we need to address security or insecurity because it constitutes to a large extent to the pressure that we are seeing on food inflation. So if we are able to, solve our food supply issues, we tackle security problems, then we can begin to think around, a slowdown in food inflation. If we take care of food inflation, core inflation to my mind, largely speaking, we'll see lesser pressure, considering the liquidity flows we are seeing in the market, which is now less, and will probably, be tamed because of all these decisions. But we need to solve, food inflation problem, and that requires a lot of fiscal policies around investing in infrastructure, solve the insecurity problem, and then let us have a situation where farmers have the ability to store their goods and and items before they are transported to the cities where they are consumed. Even the transportation costs should be much lower. You have lower transportation costs if you have the infrastructure and they are accessible at low prices or cost by the users. So I think those are some of the areas that the governments can look at. The central bank cannot solve the problem completely.
Thanks for that. Okay, so I'm still on inflation, but now applying fuel subsidy removal. Does your forecast inclusive of the fuel subsidy removal, or are you going to revise as far as? Well, basically, I'm asking you guys now. We've heard all the talk, palliatives, let the poor breathe, so on and so forth. This fuel subsidies removal, of course, has to add.
Oh no, so we did factor that in.
Okay.
Yes, and of course the recent there's another recent hike that did happen.
Exactly,
so we did factor that in. Yes.
Okay, Tajudeen,
so yes, consistent. It looks like a number that will hit 25% this year from our forecast. 3 key elements captured. 1, fuel subsidy removal. Foreign currency, or let me say naira devaluation. The third element, which is expected, is power tariff increase. All those elements put together indicate we will see inflation well above 25% towards the end of this year.
All right, so on the foreign exchange matter, I think the INE, which the acting Syrian government said he doesn't want to call it INE anymore, but how are you seeing the foreign exchange situation? I think parallel market's about 870, INE I think 790s, if not trending towards 800. So how's that? What's your outlook there?
Well, it really is a demand and supply dynamic thing, right? And some may argue that because of the new pricing, let me call it that, because of the new pricing that specific income classes may not be able to chase as much dollars with the naira that they have. And of course, that is supposed to have some impact on demand. But in my opinion, that'll be marginal. I think in a nutshell, to respond to your question, I would say that if FX liquidity constraints are not addressed, I expect the exchange rate to remain elevated, at least until the end of this year, or I could even stretch and say till the first quarter of next year.
Tajudeen, what's FX outlook?
FX outlook for me is more about liquidity, and you would not see liquidity in the foreign currency market when your when your interest rate on the short term is low, below double digits, talking about T-bills at 6%, 5% levels. That wouldn't attract foreign investment into the country. And we recognize that the bulk of our supply in terms of FX to the market comes from FPIs, foreign portfolio investors. And if they are not here or bringing new or fresh capital, how do we stabilize the currency? So we need those inflows. But for them to come, you need to have compelling interest rates, particularly on the short end of the curve. It is very important. That is when most likely we are going to see stability. The other element to my mind is when we are able to export as much as we can and earn dollars, then we can stabilize our exchange rate. But that is not a short-term solution. It will take a while. So I think what looks like a quick fix is attracting more foreign investments.
Yeah. Doesn't that raise borrowing costs? If at the short end of the curve, you're raising rates to attract FX in, what about the costs to pay that back?
The cost is already elevated, right? So what you should have is a good mix of long debt and short-dated debt instruments merged together, at least to manage the economy in the short to medium term where we have this challenge. The moment we are done, then of course the ratio can be reconsidered again. We need quick fix for such a challenge. And if we do not do it, it will linger further and we'll be taking actions without results.
Thank you both. All right, you guys have been it's good to have you. We're stretching this time. And final question, I need to ask you guys about the size of the Nigerian economy, taking this devaluation into consideration. There's a tweet from Business Insider. This was either yesterday or the day before, where they're ranking the largest economies in Africa. So yeah, so you've got Nigeria, 477 billion, Egypt's neck and neck, 477. South Africa, Algeria, Morocco, Ethiopia, Kenya, Angola, Tanzania, and Ghana. My question, Chinua, I'll start with you. Do we not, we'll have to wait for a number of things to factor in. By the time you take the size of the economy, I think it was 23 trillion or so for 2022. But don't we fall to third place if you're dividing nominal GDP by 400 and that figure now becomes 700? Aren't we falling to third? Chinua, let me start with you.
Yeah, there's a risk to decline on this ranking. In USD terms, it has actually declined by over 40%,
right,
the value. There is a severe need to boost productivity across all activity sectors that we see in the national accounts.
Yeah, yeah.
If that doesn't happen, then of course there is a risk of slipping, not even to third, well, maybe remaining top 5, but yeah, there is a risk of slipping.
Yeah, yeah. Tajudeen, what do you think?
So we have actually fallen in terms of size.
Right.
In nominal GDP, terms, we are now the 3rd largest. Our estimate at Chapel Hill Denham suggests we are around $252 billion behind Egypt and South Africa definitely being the largest as we speak. But, one thing I ask myself is that do I want to brag, or do you want to brag about the largest?
Right.
Or we want to brag about, being the best in terms of making their citizens, happy, comfortable, and also, enjoying, the benefits that the government can provide for the citizens. I think those are some of the elements that, we should be focused more on. In terms of size, that will be fixed over time.
Yeah.
We will get back to the top. But as we speak, we are third, and we need a lot for the government to do to encourage the private sector to invest more. Then we'll be talking about going back to that first position. But with high interest rates, encouragement to borrow is low, very low. So we need to encourage more private sector involvement in lifting this economy to the level it should be as the giant of Africa.
We will leave it there. Tajudeen Ibrahim, Director of Research and Strategy, Chapel Hill Denham, and of course, Chinwe Ibrahim, Head Economic Intelligence, Chief Economist, Coronation Bank. Thank you both very much for joining us to react to this latest rate hike, 18.75% MPC decision.